When it comes to investing, you can't break the relationship between risk and return. It's always there, even if you can't perceive it. But the word risk is a difficult one because it's subjective, it's vague, and quite often it's emotive. My name's Andy Baker. I'm a partner and financial planner at Equilibrium. I'm going to tell you 3 stories today about risk and how we think about them. Now, these aren't stories I've made up myself. I've actually borrowed them from Andy Hart, who's a financial planner at Maven. Now, the 3 stories are Rollercoaster, swan, and turkey farm. Now, it sounds a little bit strange initially, but I'll explain it and hopefully it'll all make some sense. So, rollercoaster. Now, this is the risk that people tend to think about when they're investing. And of course, rollercoaster obviously goes up and down in the way that stock markets do. So the rollercoaster is an analogy for volatility. But the analogy goes further because just like a roller coaster, a well-diversified portfolio, it will go up and down, but providing you sit still, you're going to get back to where you started. In fact, for a well-diversified and well-managed portfolio, you should get back above where you started. And it's worth remembering that roller coasters are only dangerous if you try and get out at the exciting bit. If you stay put, it's going to be okay. So that's the first risk. It's the one that people think about, but actually it's the least of the risks. The second most dangerous risk when it comes to investing is the ice swan. And the ice swan, pretend you're going to a wedding, and when you arrive, when you first get there, there's a beautiful ice swan centerpiece in the middle of the room. So you go and have a look, and it's got pristine detail for the feathers and beak and eyes, and the whole thing's beautiful. Now, as you look at it, it doesn't change at all. But you go away and you have your meal and you listen to the speeches and a bit of a chat, and you come back later and it's still a swan probably, but it's not the swan that was there when you first arrived. It's melted a bit, it's ice. But as you look at it, it's still not changing. So you go back to the wedding and you have a few more drinks and a dance and you chat to the bride and groom. And before you go home, you go back to the ice swan to have a final look. And what you find is a block of ice and a puddle. But again, as you look at it, it doesn't change, although you know it has, of course, because it isn't what it was when you first turned up. And this is an analogy for inflation. So as you look at your money in the bank, it doesn't change, but we know, particularly at the moment, inflation is gradually dripping it away. So that's the second biggest risk of all, roller coaster and then ice swan. But the biggest risk of all, and this is something that people don't always really think about, the biggest risk of all is the turkey farm. So you're a turkey and you live on your farm and you're dead chuffed with your life because it's a free range farm. You're there with all your turkey mates. The farmer gives you as much to eat as you could possibly want whenever you want it, and you think, I've cracked it, life's awesome. Until one morning when you wake up and there's a nervous tension around the farm and there's slightly fewer of your friends around, and you realise that one by one you're being led out of the turkey farm, and you look at your turkey calendar and you realise, crumbs, it's December. And this isn't everything you thought it was. You hadn't cracked life. And not only had you not cracked life, it's gone from fantastic to catastrophe. So that's catastrophic risk. And that's an analogy for, probably flavour of the month investments. Something where you're dead pleased with how it's going all the way until the point where it's a disaster and the money's gone. So that's catastrophic risk, and that's the type of risk that's really, really important to avoid. So what we have is roller coaster, ice swan, and turkey farm. And of those 3, actually, roller coaster is the really important one because the reward for accepting that roller coaster ride and that volatility over time should be better returns. Certainly if the portfolio is well diversified and well managed, and that actually should allow you to combat the ice swan risk. I hope that's been of interest and helpful. Thank you for listening.